Ain't gonna let those shoes get justice. Good morning, everybody. Happy Thursday. It's April 11th, 2024. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites, talking a little bit about the markets, what happened recently, what may be happening down the road here. And, of course, yesterday was just a road collision with the hot CPI number reflected in lots of different groups that caused the markets to really take a nosedive, especially right at the open as well too. And we did hit a low of about 80 handles down at one point in time in the pre-market. We bounced back, came back down again, and closed a little bit off the lows yesterday, but still. And then it was a rough day. Breath was horrible. We can see that in the internals. Let's take a look at that today. We'll focus here on this. You can see, look at the negative ticks on the NASDAQ. Huge red candles versus the arrows in the green. Same with the New York Stock Exchange down over here on the bottom. And you can see the heavy selling amount of sell programs that were going on all day long yesterday. The VOLD all the way down over here. ADD fell and never recovered. We did see a little bit of a recovery in the VIX. It did spike up above 16. It can't stay above 16%, it seems. And this morning, we see the VIX just under 16%. So that seems to be an area of resistance for the VIX. Going back to the internals over here, one thing I want to point out to you here is a potential extreme here on an oversold market is when the VIX, when the put call ratio reaches 1, and especially if it's there for a couple of days in a row, that's generally a good oversold reading, and it might present a nice buy signal here. We do see the futures have recovered from the lows earlier from this morning. The economic data came in a little bit mixed. We saw U.S. PPI numbers came in at 0.2 on the core, super core actually, 2.4 on the core year over year, 0.2 on the core month over month. That was mostly in line. The headline number at 0.2 came in a little bit lower than expected, of 0.3, and also the year over year, month over month was 0.2, year over year 2.1%, slightly lower. So we'll have actually right now, John Williams from the New York Fed is going to be speaking currently, and we'll have another couple of Fed speakers later in the week today. Tom Barkin from Richmond Fed is going to be speaking. ECB President Christine Lagarde is going to be speaking at about 10 o'clock this morning. They, of course, had an ECB press conference just going on right now. They had a decision on interest rates, and they went ahead and kept rates the same at 4.75 on the lending rate and 4% on the deposit facility rate. So that was not unexpected. So what happened yesterday? Well, obviously, the markets did not like the CPI number, came in extremely hot, and interest rates rose up. Let's take a look at interest rates here for a moment. And you can see here that here is a graph of the 10-year yield, right? This 10-year yield, it's been rising up since the end of December, making higher highs, higher lows. This is the textbook definition of an uptrend. Higher highs, higher lows, and it broke out yesterday above 4.5. And I had noted quite often that the 4.4 level was the one that you really needed to be careful of, be interested in. And once we broke above that 4.4 level, all hell broke loose. So we did see a good sell-off. Now, what does this mean for the Fed and potential rate cuts? Well, they've been reduced drastically, and so May there's only about a 5% chance of a cut. June is down to about 21% according to the futures market. You got to go all the way out to September for any sort of handicap here that there's going to be a rate cut. 4.75 to 5%, anywhere from around 5%. So it's about about a 70% chance of a rate cut in September. I haven't seen any of these months indicating a rate hike, but there is December has a 10% chance that we get 0 cuts this year. Look at that, 9.9%. 30, almost 40% chance we only get 1 cut in 2024. So, you know, this is the thing that the markets got way ahead of themselves with the expectations of more rate cuts than the Fed had indicated they were willing to do. Right? Back in December, they said 2.5 rate cuts. Back in March, they said 2.5 rate cuts. That was last month. But with the caveat that they're going to be just paying attention to the data, right? And if when the data's turning, they will make note of that and make the adjustments as they should. So listen, you know, we heard last week 8 Fed speakers, most of them telling us that it's far too early to be cutting rates. We even had one Fed governor who said maybe rate hikes are not finished yet. That was Mickey Bowman came out and said that. So she is an influential person on the committee. So I think, you know, again, what we need to do is pay less attention to the noise and whatever the market is trying to anticipate. Right? Listen, momentum goes a long way, and when you're feeling really good and the market is doing well, you reach and grab for anything that will keep that momentum going, right? And when that happens, the anticipation of say, for instance, rate cuts is going to help propel the markets higher, which is what it did earlier this year, right? The anticipate because markets do go up when the anticipation of rate cuts is in the air, and it has been in the air. It's been talked about by the Fed and by Chair Powell. So I think that the market had pretty much misinterpreted what the message was and got a little bit too, let's say, bubblicious over the past couple of months, and it's pulling back a little bit right now. But we are starting earnings season in about a week. Tomorrow, some of the big banks like J.P. Morgan and Citigroup and Wells Fargo and BlackRock are going to be kicking off earnings season. We got some more coming out next week as well. So it'll be interesting to see how they report and what they're saying about their businesses. I think that we're going to have a really strong earnings season. I don't really want to be short too much into earnings season, but I will tell you that you know, the action of the past couple of weeks has not been inspiring. We get a couple of bad days. We recover from one day, and then we get another couple of bad days. Let's take a look at the chart, shall we, and see what I'm talking about here. So the S&P 500 chart looked like it was about ready to test that 50-day moving average yesterday, which is a blue line. Let's open this up a little bit. You can see that. Here's a blue line down over here. Look, it was making a run down there. It need to get down to about 5,100. We may or may not get there today. Looks like the futures are up about 3 points. It really looked like if the bad number was bad and the market was going to take it poorly, that we could get down to that level before the end of the week. But we still have a little bit of time to go to see what happens. We've just been making a series of lower highs and lower lows, and that is our textbook definition of a downtrend. We can see relative strength has been poor. Volume trends have been bearish. We've had some distribution days on the S&P 500 and several more on the NASDAQ, on the Russell 2000. The MACD has rolled over. So the indicators are telling you that it's correction time here, or pullback time. Much more severe than we had prior. Why do I say that? It's because this 20-day moving average last week didn't hold, right? We broke it severely on heavy volume on Thursday, tried to recover it on Friday, and so far this week we haven't really made an attempt to try and get over that level. We pulled down and gotten right back up again, but then yesterday was a watershed day here with lower highs and lower lows, and we closed just about the level of the lows on and the close on from last Thursday. So the jury's still out here, and with the markets here to see how we're going to do. But we're going to pay attention to the data and watch the earnings and watch the action of the markets over here. I want to show you another chart as well. I want to show you the oscillators here, and we can see that the oscillators got to a fairly oversold reading. 113 on the NASDAQ, 134 on the New York Stock Exchange, which is fairly overbought, but not extremely overbought. We can get an extremely overbought in the 200s and the 300s over here, and that would be a really good sign to start jumping in there and buying something. But I will tell you that that put call ratio that I showed you guys earlier is a good signal as well too. So we'll see if the markets do indeed rally off of that. So I think that's going to be it, everyone. Again, sorry we're getting started a little bit late today. I had to go to the airport, and I'm back, and then we had the PPI number and a few other things as well too. So I wish you guys all a great day, a great weekend. Good luck with trading today. If you've got some puts on, that's great. You should keep some puts on. Always have some protection on, because you never know. Like yesterday, wasn't it great to have some puts on yesterday? It sure was for me. I hope it was for you. Service is doing great. If you're not in the chat room, certainly come by. We have a new channel. It's called the Crypto Channel. Brian and TJ are basically managing that room for us and doing an incredible job. They're putting in trade ideas, talking about crypto, Bitcoin, Ethereum, all these other different cryptocurrencies. Stop by and see what we're doing over there. We're going to have an open house very, very soon. So I'm hoping that everyone will get a chance to see what they're talking about. Very exciting. So anyway, listen, everyone, have a great day. Trading day starts in about 30 minutes, and I'll see you guys all on Monday. And oh, by the way, I guess Monday is tax day for most people, except for here in Massachusetts, which we have, that's going to be it's Patriot Day. So have a great weekend. I'll see you guys all on Monday. Take care. Bye. The very next day.